Alright, YouTube, I'm back with the video that I promised. I hope everybody cashed out today, finished up over 5%, but this week I finished just under 1%, just about. Anyways, this video is going to be about the levels, the chart analyzation is going to be about the support levels, resistance, the upward trends, downward trends, and hopefully I'll try to, explain this, very simple so that way I won't overcomplicate it for you guys. So that way, when you get the software that you're wanting, so you can do it, you'll be able to understanding and how to profit on those support levels. So we're gonna start off with support. The support level is just that imaginary line that keeps that stock up. So say if the stock went to the goal line that I drew, it's gonna bounce back up. As you see it did it a couple times, and then after a while the sellers just push it all the way down through. So typically what you're going to see breakthrough support is that those huge sellers come through and you start to see that candlestick extend. It's going to turn large, and you're going to see a large rectangle, a large red rectangle. That's when if you're in the stock, you should have got out, because that is going to break through a lot of support levels, and it's going to be hard for that stock to get back up unless there's a lot of buyers or the news talks about it. And next we're talking about resistance, and that's just pretty much what is keeping this stock from not going up any further. So yesterday oil was on it was on a downtrend, a heavy downtrend, and you didn't know where this thing was going. People were saying, the next support level is 40. Some people were saying the next support level was 38, 38 and a half. But we got, I guess, dud numbers. The numbers weren't all that good, but we still found a way to be very bullish. So crude oil started to tick up. I seen it tick up last night. It was up 40 cents, and then all of a sudden we get this good number, and it started to be up $1, $1.40, $1.30, and as you see, the stock is, it showed an uptrend, and it set higher highs, and as you see, it just couldn't break above that top line that I set. And believe me, it is okay if your lines don't work out, as perfect as you want them to. Make sure you're practicing and understanding how to do this. You're going to put it at the top of the candlestick, at the bottom of the candlestick, or you're going to get a good range of how the stock is moving. That's what I want you to see. Also, we're going to talk about an upward bullish trend, and that's pretty much, as you see, it's like an upward wedge or whatever you want to call it. I know it's a couple names for this thing, but as you see, it's an upward trend. You see the gold lines that I highlighted. The top, you can have an upward bullish trend on the other side as well, for the top. And even if I did the top, you'll be able to see the resistance lines for the top, but it's going to keep ticking up. There's no way that this thing is going down unless we get a really bad number or, whatever happens. But from a chart standpoint, this thing is going higher, but as you see, there's a resistance line that is above 1350-ish. So we should probably see 1360 or 70, wherever that line is. That's where you're going to see resistance kick in. So that's when you're going to see the gold prices start to struggle. Last but not least, we're going to talk about a bearish trend, and that is just basically downward trending. As you see, this is Valeant Pharmaceuticals. This thing was almost $200 a share, and look at it now. So the downward trend, you can see it happening. I plotted on my lines. You see the resistance all the way down. It's setting lower lows or lower highs, and as you see, the bottom support, the support, you can have a bullish outlook on that, but at the same time, the stock is still falling from 32, and it's all, it goes below 31, as you see that support line being broken through. And anytime you see these support or resistance lines being broken through, they're followed by huge candlesticks. They're not followed by any small candlesticks. They're usually followed by huge candlesticks, and that's what you see getting these things out. And whenever you hear me talking about filling a gap, The gap is just basically what you're seeing right now. As you see those to the left side, you can see that huge spike. When stocks go down, it's gonna go down filling that gap that it's set already. So if something goes up, you know, you could say something shot from $8 to $8.50. When it goes down, when it gets to the $8.50 mark, it's gonna go down all the way from $8.50 all the way to $8 because there, you know, there is no leg of support there because it gapped all the way up, or you say something gapped all the way down. So you want to make sure you're in for those air pockets, and you want to make sure when something's going down and it starts to get in that gappy range that it shot up to, you want to make sure you're getting out of that because who knows where that could fall. Chipotle faced the same, you know, it faced the same thing, huge gaps, and you know, it falling down. It was very scary for a lot of investors. So if you guys want me to do a video on anything that you don't understand or anything you don't understand in the market, please let me know. I'll be back with a couple more videos next week. Happy Labor Day. Hope everybody has a good weekend. Tuesday should be a good promotion day. I do follow promoters just only for NASDAQ. And that should be it. Alright, take care, guys.